What's up, everybody? Welcome back to the channel. It's your girl No Limit Lee, aka Leela, and I'm excited today. I have so much news to share with y'all, so many good updates, so many good gems, good value I think I can drop in today's market review. So without further ado, let's just jump into it. So today, literally today, is the first of the month. I love the first of the months because they always bring a lot of opportunity because a monthly candlestick has closed. Usually monthly candlesticks take, average 30 to 31 days depending upon the month, but they also hold so much data and really tell us about the market direction. So on the screen already, we have the monthly candle for UJ up and about. I am going to bring you through what this monthly candle tells us, which will also go into some of the trades that I took last week and what I learned from those trades. So as we know, UJ had this huge uptrend that it's been going on since right after the pandemic, since literally 2021. We had that huge pump because interest rates were so low. The dollar was pumping. We had nice bullish structure. We had higher lows forming. Let me mark this off. We had higher lows forming here and here. So I knew when we were looking at this this bearish drop that we had, and I believe this was from it was either a push up in the unemployment rate or a lower than expected CPI reading, or it might have been a combination of both. I can't remember because that was all the way in July, but I think it was a combination of both. So my target that I was always looking to for this bearish push was to this support that we had here. That I didn't think it was going to push past it. If it did push past it, then I knew for sure we were in a bearish market, which also means that we probably would have been in a recession. But we didn't have that. So we had that strong bearish push, strong bearish engulfing pattern. And then fast forward to this month, we had this strong push. I believe on probably my first video, this candle was very thick. But I think I even talked about it last week where I said we might start to see buyers come into the market due to the Fed saying at Jackson's symposium that they were all but unanimous on a rate cut, for this month in September. So what we're seeing here now is literally there are buyers entering into the market. We have the sellers that were exhausted. They pushed it all the way down those first couple weeks. Last week, buyers entered in and they pushed price all the way back up, forming this large exhaustion wick. So we're on the monthly candle. That means the monthly time frame. That means this wick is forming structure on the lower time frame. And this is going to bring me exactly into the trades that I took this week and what I learned. So let me just hop down to the 4 hour because I remember last week we went over structure like crazy. So let's just review it one more time. So remember my entries were at all of these lower high points. Lower high point here, lower high point here, lower high point here. I think lower high point there, or lower high point here. So that's how I was measuring my structure. From high to a low, to the lower high, to a low, to the lower high. We had the strong push. Remember we talked about that. And then we had another lower high form, continue to be bearish. So this brings me back to what we were looking at last week. I said that one reason why I was not confident that my original take profit was going to get hit was one, because of the news, and two, because we had to go through this level of support that already had been established over here on the daily time frame and then was retested that week and still was confirmed as a support. So my goal for last week was to get in at the best opportunity for the market to start transitioning to a buy. So let's talk market transitions. Let me just draw this real quick. So normally, and because we're kind of in a, I'll say a minor selling structure right now based on the higher time frames. So that means, like I just drove, we were looking for from highs to lows, to a lower high, to a low, to a lower high. So in order for this to continue, we would have to break through the support of that previous low, and then form another low, a new low, and then, a pullback for another lower high. Since we're in a transitioning market, there are two things that I normally look for. It's either we get that low, we get another lower high, we get like a higher low formation, and then we have a break of that previous resistance from that lower high that formed, and then we have a support that forms over that previous resistance. That lets me know the sellers are no longer in control, the buyers are taking over, and it's time to start looking for buys. There's another formation that we kind of have, where it's a little bit more aggressive, where it's still like lower high, lower low, lower high, lower low, and it just breaks up. We don't even get a warning. We just get a low, it breaks through this resistance, establishes a new high, establishes a higher low, which is another new support over that previous resistance, and then it continues its merry way up. And obviously we should be looking for buys. So in either one of these examples, the most important thing is to understand when that break of structure happens. And that's really what I'm always usually looking for, is that break of structure. Now, if we are doing the traditional way that I'm looking for entries, you know that I was looking for them over these lower highs. Again, on this side, and again on this side. So those were where I was looking for my entries. On this example, if I start to see the market, especially on a higher time frame, so daily H4, start to form a higher low, even though we haven't had necessarily a break of resistance, I am okay based on my rules with looking for an entry in this area. It's just something that I've experienced and watched a lot when I've missed out on a lot of opportunities for trades because I was looking for this pattern over here, but this was the one that the market gave me. If I am in this kind of transition, I will actually wait for this resistance to be broken and then the establishment of a new support over that resistance. And that's just because, again, of my rules. And I don't like to counter trend trade. I lose so much money when I counter trend trade. It is literally just ingrained into me to rather be patient than to lose my money and be greedy on taking trades outside of structure, because it does not yield any positive results for me. That's how I trade. I know some people trade counter trending. They're amazing. I wish I could do it, but that's just not how my brain works. So on this one, I'm not even going to look. There's no way I would look for a buy here, because I'm still thinking we are in a selling structure. So this to me would be a strong no, not doing it. This right here would be my first opportunity that I would look for a buy based on my trading rules. So let's keep that in mind. When we had this structure, we had those lower highs forming. I got to trade on every single point of structure. Then this week we had this formation. Boom, a higher low formed. How do we know a higher low formed? We have two or more candles going in the same direction. So this is market structure. This essentially should have formed another low below this daily support line, and then it should have continued on the structure, but it didn't. We had a bearish candle, a bullish candle, signifying that this is a form of support. Let's highlight that. So these two candles form support, and then we had a continuation of that bullish structure. So from here, we saw kind of retest of this high. It really didn't, break through it. That's fine. But then we have a formation again of another higher low. We have 2 or more candles in that direction. That signifies this is market structure, not tested. Let's connect. This signifies market structure, not a tested candle. So we know that this is actually a legit push by the sellers to bring price back down. Then we have again another formation of a support. We have a bearish candle, bullish engulfing pattern, therefore signifying that the buyers are still very much in control and are looking to push price higher. So we have that support. Then we have another push. This time, this high is a new high. It's above this resistance that was formed here from our previous lower high when we were in the selling structure. So that forms a resistance. We have another higher low. Again, two or three candles in the same direction. Bearish candle, bullish candle support, another bullish candle, another bullish engulfing pattern that sells us again. The buyers are in control and looking to push price higher. So this is where we are now. And I'm going to pause there before we start talking about what I'm looking at for next week. Because in this entire area, let's just highlight this another color because it was crazy. Let's go pink. This entire area, I got slapped up. Listen, transitions are my area of most growth, and I have no shame in saying that. I'm great in trends. Once market structure is established, y'all saw I was slapping it up. I know exactly where my entries are and exactly when I need to get out. Transitions, however, are very, very hard for me because I'm still working on being patient and I'm still working on timing my entries because in a way, you have to, I don't want to say it's like counter trend trading, but you are not entirely sure yet until this previous lower high is broken. So I actually had a trade in this area. I waited up for it, I took it, and I did not like how this looked on the lower time frame. Like, let's see if I can show y'all. Like, it was very sloppy, very kind of choppy, hard to read. I mean, it looked even worse on my entry time frames. I was like, I didn't like these pullbacks. They were very strong. So I got out with small profits. And then I realized after, I was like, no, it looks like these higher lows are being maintained. I probably should have held. So I tried to get back in, which only put me in a worse entry because this one had at least all this cushion. This one does not. The price has all this way to retrace back. Like, price has all this way to retrace back. Look, 71 pips. That right there at my lot size could possibly, remove half of my account depending on how I'm trading. So the best entry was actually the first one I had because it was less likely that the market was going to go through this level of support based on the news and again based on what we analyzed on the higher time frame. So I did take a couple L's this week in this area because it was just very hard for me to read and stay in. If I'm being honest, like I said, I don't do well in transition areas, and this was actually the first time that I actually really tried to trade through. But I learned so much from this that I know, like, next time when I see a formation like this, like even if I have to wait for it to be like this previous bearish candle to be engulfed, meaning these two bullish candles to close over this previous open on the bearish candle, I think I'd be even happier with taking the very next entry signal and putting like when I up my lot size on it, because I know that the risk that I'm taking is actually like a lot less. Like, it's less likely that the market will go against my trade or my analysis. So it's just, these are things that happen all the time in trading. It was very rough to take L's back to back, especially after I had such a great week, which was probably one of the best weeks I had in terms of percentage wise of flipping my account. But this is trading. We take L's and you have to move on. You have to push through. With that being said, when I finally got it together about Friday, I realized, okay, even though I missed, a couple opportunities here, there's still more opportunities to get in here. So I think I actually ended up getting in like somewhere around here on this candlestick. I don't remember, but I know it was before the news that we had last Friday. And yeah, I took this entry based on the fact that this previous high was broken on the lower time frame, and then I just got in, and it was like, if it looks right, I'll take it, and I ended up breaking even for the week, which is okay. I'm not bad at break even weeks. You know, obviously I would like to be in profit, but it's better than losing money, that's for sure. So that's kind of just how this week went. It was kind of crazy, but definitely showed me again why I value one, being patient with my entries, and two, why I have to rely on market structure and what I understand market structure to be. So that's basically it for last week. Let's talk about this week and this month, because I think some great things are coming up in September. Let me just clear up the screen a bit so we can have less distractions. I'm pretty sure there's an easier way to do this, but I haven't figured it out yet. Actually, I need that. Remove this. We don't need structure points anymore. Hope you guys understand what we're looking at in terms of structure. So let's talk about this week. First things first, like we always do, we go to news first. And if you haven't picked on, or looked at the URL, what I use for news is Forex Factory. And I think I went over in my first video that, I only look at the dollar, USD, and the yen, JPY. That's all I trade is UJ, and that's all I'm going to keep trading until I feel like it's time to level up. So I also only look at the red and the orange impacts. That's just what I like. Otherwise, I feel like it gets very clogged. And sometimes the yellow ones don't really move the market much, but it's just a good to know or a nice to have when you're looking at. But for me right now, I like this. I like anything that's less noise and very organized and clean. So let's talk about September. As always, at the beginning of every month, we have unemployment rate this week, otherwise known as NFP, otherwise known as the accounts layer. And it is the accounts layer because people are not patient and they go crazy and they try to trade news when they aren't prepared. So let's talk about NFP. Where do I think NFP is going? Honestly, I don't know. But I'll tell you what, if it's bullish, it'll definitely, when I say bullish, that means the unemployment rate is either at the forecasted rate or lower. The market, my price for my pair UJ will go extremely bullish. And again, the trades that I have open will be in profit. And we'll talk about that in a bit. And then, so also in NFP weeks, we have 2 days of major news. So one is the actual NFP rate reading on Friday, 8:30. The other one is when ADP does a non-farm employment change, which tends to kind of reflect what is going to happen in the rate. Doesn't always. There are times, and there have been times when I traded it where the ADP was showing bullish, and then the unemployment rate came, NFP came, and it went bearish, and it slapped up my account. But when it comes to news, especially the unemployment rate, these are things that happen every month. They are always, and I mean this, always priced into the market before news drops. If you think about it, nobody is on the little computer or a NASDAQ literally putting in the data or the information at 8:30 a.m. That thing is priced in. It's already set to go, scheduled, whatever you want to call it, before news hits. So it's always important for me to be on the charts every single day for sure, but definitely the day or two before major news happens, because I know market structure is going to tell me where the buyers or sellers are looking as news is coming. It's so critical. This is something that it took me a long time to learn. Like I said, I've lost a lot of money messing around with NFP, but I've also gained a lot once I finally figured out I just have to, one, have to be patient, and two, analyze, and then trade. So let's keep that in mind for this week. So I think I just went over that. I took 2 trades. that I still have open. So one is in this area. This was a continuation trade based on the lower time frame. And the other one is on the formation of this higher low. So I have 2 trades open right now. I held it because we have a very, very nice, strong bullish candle on the daily, showing a continuation of buyers in the market. We're also above this EMA, which is really, really good. I think the only time frame we're still below is on the weekly. But as you can see, even with the weekly, with the closing of last week's candle, we formed a very strong support. And, if news goes in our favor, I'm honestly thinking that this week's candle that will start forming when Sunday opens, when market opens on Sunday, will engulf this bearish weekly candle, and then we definitely for sure know that it's nothing but a buyer's market. If you ever paid attention to the monthly, we're still below it. But like I said, with this exhaustion wing, I'm seeing that buyers are coming into the market. So it just depends on, is news aligning with the market, as well as how are we going to do in 2 weeks when the federal funds rate comes out. But I won't talk about that now because we still have 2 weeks. And this week we're focused on unemployment rate. So as usual, like I said, we're looking for a continuation. Another thing that I see that's a possibility of forming is this double bottom pattern. If you don't know what a double bottom pattern, you need to go look it up. But it's basically boom, a high to a lower high kind of forms, and then you have a retest of that low that was just formed here. And usually what happens is we have a huge breakout of this resistance, and then it keeps going. So if that is to happen again, great. I'm still in some great entries, even though I didn't get my optimal one at the lowest point. We still have some good entries that we could hold for however long the trend goes. So that's really what I'm looking at this week. I'm just looking at more opportunities to continue to look for more buys as the market goes up to this daily resistance. If the market breaks through this daily resistance, great. We are looking at major profits for September, especially if news is riding along with the bulls, because I'm bullish right now on the dollar, baby. So that's all that I'm looking at right now. We had let me clean these up. Got these higher lows coming in on the H4 time frame. We got supports being made. We have a resistance here, so we'll probably have some sort of pullback into this zone, or we'll probably have some sort of a formation of support above this zone, and then we'll continue to go. So that's really what I'm looking at this week. Just want to continue looking at my buys, reading news, analyzing, see how the market is reacting to the news and everything that we have. And let's talk about September. One more thing about September. So this month is probably going to be very volatile because I touched on it a little bit earlier. Not only do we have the unemployment rate this week, next week we have CPI reading, which will hugely affect the federal funds rate reading that we have in the third week of September. So we want to see, if you are bullish like me, right now what you want to see is you want to see unemployment probably stay at where it is. Even if it goes higher, it may show some signs of selling on the chart, but it would actually make the Fed's case for a rate cut stronger. So it still will not remove my bias of bulls being in the market. And then with inflation CPI reading next week, we also want to see that either at forecasted or under the forecast, because if it's over the forecast, then the Fed will probably not likely to want to do a rate cut. So those are the two big things that we have to see align with the Fed strategy to cut this month. If either one of those are off, we might not get a rate cut, but we'll see. And just to explain, just in case you don't know what a federal funds rate, but you should because it affects you, even if you aren't a trader, is the federal funds rate is the rate basically that the banks borrow from each other at. But it's more than that, because what it really is it's what I like to think of it as is like a guideline for you to borrow money, right? If the federal fund rate goes up, guess what else is going up? Rates on your car loan, rates on your mortgage, rates on your credit cards, because it becomes more expensive for you to borrow money. When the federal rate goes down, it becomes less expensive. It means there are more opportunity for investment. More people want to buy houses. More people want to buy cars. More people want to charge up their credit cards, although that's not probably the smartest thing to do. But that is what usually gauges from the federal funds rate. And if more people have more money, the dollar is circulating more, which means the dollar is bullish. So that's just an economic thing, but it's a thing to keep in mind when you are looking to trade the federal funds rate decisions. And that's something that you also have to follow in the news. A little bit of fundamental there for you. Like I said, I'm not a fundamental trader, but I like to follow the fundamentals. But the technicals always show where the fundamentals are heading for me. Anyways, I think that's it for this week. I hope you guys are very profitable. I hope you guys be blessed this week. Make some money. As usual, if you or anyone you know want to learn more about trading, if you like my videos, let me know. Like, subscribe, comment, bust the notification button up for me, and share this with someone that you know or love. And I just want to say this so I can encourage anyone, even if you're not trying to trade, but you're just trying to get somewhere in life, remember that the only limits that exist are the ones that you place on yourself. So don't place any on yourself. Go after it. Let's get it. Happy Sunday, and happy trading week. Peace.